Good afternoon, everyone. Thank you for joining us for today's webinar. My name is Shirin Guru, and I am the Business Development Manager and Training Coordinator at Business Center for New Americans. BCNA is a nonprofit small business lender serving small businesses in New York City since 1997. We provide financing, technical assistance, training, and resources for small business owners. During this current crisis, BCNA has been assisting our existing clients by providing relief programs such as emergency loans, PPP, and connecting our clients with other COVID resources. The webinar is hosted by BCNA in partnership with Queen Chamber of Commerce and sponsored by City Community Development. To speak on today's webinar, we have Paul Rosenblum. Paul is the owner and founder of Numerex Services that provides professional bookkeeping services to small business owners. Paul has over 20 years experience working with small businesses, and it's a great pleasure to have Paul here today to speak on today's webinar. Thank you.
So first of all, thank you, Sharon. It's a pleasure to be here. and Jacqueline, both. Let's talk about PPP and idle money when you receive it. Now, I want to talk about really both of these loans. The idle is a little easier to explain and talk about than the PPP. I also want to discuss it a little bit from a bookkeeping and an accounting point of view, which is unlike a lot of the webinars that are out there. Because I am a bookkeeper and it's very important. One of the things that we've learned from the whole COVID situation in terms of bookkeeping and running a business and accounting is your books are very important. And your books are important to keep up to date, because the second that the businesses were shut down in March, my phone was ringing off the hook with people who wanted to apply for the PPP and the idle and the New York City grants. And there were a number of books that were not absolutely up to date. So if it's anything we've learned from this moving forward, we need good sets of books, and we need to be able to account for things like loans and grants, things like the PPP and the idle money. So today I want to start talking about when the money is received. When it's put into your bank account electronically by your bank or your lender, how do you account for it in your actual books? If it's QuickBooks or if it's another piece of software that you are using. Then we're going to spend some time in what is forgivable and what is not forgivable in the idle and both the idle and the PPP loan/grant. How is this going to affect your 2020 tax return? This is one of the questions that have been asked probably 1,000 times in the last month or 6 weeks. And we don't know 100% yet, but we do know certain things about where it's going to be accounted for on the taxes and how it's going to affect your taxes. And there is very good news when it comes to that. And then at the end, we will have a question-answer period. So let's talk about the actual accounting for the idle and the PPP money. On the top right, I have a little cutout here, a picture of part of the chart of accounts that I've made for a particular client of mine. And if you notice on the bottom of this little picture here, it says SBAD TREAS, TREAS 310 idle. This is how I account for the idle or the EIDL money coming into your bank account. Now, sometimes what happens is if you are receive a notice saying that you have applied for and you are approved for $85,000 or $90,000 of idle money, you might get two deposits. You'll get one deposit for $10,000, which is the part of this idle that might be forgiven if you do everything right. And you'll get another deposit of whatever the amount is that you've been approved for. both of these deposits, this is what I do from a bookkeeping standpoint, is I add on the chart of accounts, I actually add the under other income, which is on the very bottom of the chart of accounts. It's underneath the profit line. So I want it to stand out for people looking at the books, and I want for business owners to easily find where this idle money and PPP money is. Now, what I'm also trying to do with as many clients as I can is to have a separate bank account for the idle money and another separate bank account for the PPP money. Both of these loans and grants have very specific rules, and the rules really make you prove that you're spending the money in the right way to get this forgiven, or a part or all of these loans and grants forgiven. So I like doing things with separate accounts. If this particular company had a PPP deposit, then I would put that right next to this SBAD idle, also under the category of other income. That's how I'm doing it. I like it on the profit loss because if you put it on a balance sheet, then from a bookkeeping standpoint and from a business owner standpoint, most business owners will run profit and loss reports a lot more than they run balance sheet reports. So this is why I put it on the profit and loss. And any amount of these loans that might not be forgiven, it's a very easy accounting entry to move values around to do the right thing at the end of the day. But that's almost another course in bookkeeping and accounting. But I like it to be on the profit or loss on the very bottom. So let's talk about the EIDL. The EIDL, the EIDL, or the Economic Injury Disaster Loan, and the PPP, the Payroll Protection Program, should have separate bank accounts and separate chart of accounts in your software. And again, I do this because we don't know at this point if 100% will be forgivable or if less will be forgivable. Let's talk about forgiveness. The EIDL, or the EIDL loan, can be up to $2 million. And it's, even if none of it gets forgiven, the rate of 3.75% of interest over a possible 30 years is one of the cheapest loans that you're ever going to get. So it might be good to go into it with the idea that very little of this is going to be forgiven. And if it is forgiven, that's great. And the first 10,000 can be forgiven. So if you have an EIDL loan or an EIDL deposit that is $85,000, the first 10 of that 85 can be forgiven. The 75 that is remaining is a regular loan. And that regular loan does have to be paid back. You now have 30 years to pay it back at a 3.75% interest. So let's talk about what you can use the EIDL grant for. Number one, sick leave to employees who are unable to work because of the COVID virus. I understand that also if it's a single mother or a single father and they have to stay home with the kids and they can't work, and the job that they have cannot be done from home, it has to be done where the company is located, then you can use the EIDL money and get forgiven for that money for sick leave to those employees. You can also use it to maintain a payroll for W-2 employees. Now, it gets very complicated if you have a PPP and an EIDL loan, both. But if you don't, if you have the EIDL, then only you can use the first 10,000 and be forgiven to maintain a W-2 payroll. You can also use it for rent. You can use it for utilities, which is including telephone. So it's telephone, it's oil, gas, water, and electric. You can also use it for mortgage interest if your company has a mortgage on a piece of property. The mortgage principal is not part of the EIDL grant, but the mortgage interest is. I'm a little bit unclear about property taxes, even though you have a commercial loan, a commercial lease, and you're paying rent on that commercial lease. As part of that commercial lease, you are also required by the landlord to pay their property taxes. There's no wording that I have seen on these grant programs or loan programs that it specifically says or it does not say it does not cover property taxes. But just to be safe, I would use the money for rent and for payroll and for sick leave, and make the property taxes the last thing. You may not need the first 10,000 for property taxes anyway, but to me and experts in the field, it is a little bit unclear if property taxes are a part of this. The increased cost, this is a little bit unclear also the way it's worded. The way it's worded is increased costs to obtain materials, which is basically cost of goods. So if you are a restaurant or a fast food restaurant and you're buying ingredients to make meals, then according to the way it's worded, the increased costs for that cost of goods would be covered by the EIDL money. It's unclear if all of the cost of goods will be covered. My feeling is probably all of it, only because how do you really separate the additional cost to what you might buy as ingredients to what it was just 2 months ago, and how do you really know it is increased because of COVID? It could be increased because of something else. So that is a little bit unclear to me, but that's the wording that actually is in the law. You also can use it to repay debt, but you cannot use it for old debt. So if you have a $30,000 credit card that has debt on it, that has $30,000 of debt from 3 years ago, the payments that you make, the monthly minimum payments that you make your credit card to stay in business and not ruin your credit rating, that is covered by the EIDL grant, by the first 10,000, but not the entire amount. So you can't take a $10,000 debt from 3 years ago and use the first $10,000 of an EIDL to wipe that debt clean. So they don't allow you to do that. But the monthly payments, yes. You can also use it for lease payments. So you can lease a vehicle, you can lease furniture, you can lease televisions, you can lease a lot of different things, copy machines, anything that you lease, or equipment for a commercial kitchen, something like that. Anything that you lease from month to month can be used, the EIDL money can be used for that. Just a reminder, we're talking here about the first $10,000. If you get a $100,000 EIDL loan, we're only talking about the first 10,000. The other 90,000 of that 100 is a regular loan that has a 3.75% interest, and there are no rules. You can use that money any way you want because you're paying it back. So we're only here talking about the first 10,000 for the EIDL grant. What you cannot be forgiven on, you cannot use the EIDL grant for dividends or bonuses for either employees or stockholders or shareholders. Payroll, regular payroll, yes, but bonuses, no. You cannot use the idle grant for that. If you're an S corporation or you're a multi-member LLC, you cannot use the idle grant, the first 10,000 for disbursements to owners. Disbursements of a partnership or disbursements of a multiple member LLC are done through an equity account always, and that has to do with the profit of the business. So you cannot use the idle money for that. If you are an owner of an S corporation and you lend personal money to the S corporation, or a shareholder or a stockholder lends money to a corporation, that loan to the corporation cannot be paid back using idle money. That will be unforgiven for that. So you'll have to pay that back at a 3.75% interest. Even if you were going to, in December or January, expand your business, maybe another location, maybe if you're a food business, like a food truck business, you're buying another truck, you cannot use the idle money for that. Even if you were going to expand your business. So you cannot expand your facility, you cannot use it for leasehold improvements, you cannot purchase assets with the first 10,000 of the idle money. You also cannot use it to refinance long-term debt. You can use it for monthly payments on that debt, but you cannot use it to refinance long-term debt. You also cannot use it even if you say, you know, working from home has really worked out. I want to downsize my office so I can spend less money on rent moving forward. You cannot use the forgivable amount of the idle money for relocation or moving expenses. That's on you, but at the same time, you would be spending a lot less money in rent after you move. That's the idle. It is a much easier set of rules for the idle, because I think a lot of people, even before we start talking about the PPP, there are several clients of mine who have gotten idle 80, 90, 100, up to 150,000 in idle loans. And they have said to me, you know, I know we can get the first 10,000 back, but I was going to expand my business anyway in December or January. I'm just going to use that whole idle loan, forgetting about the first 10,000. I'll repay that at 3.75% interest, because that's probably the best interest that I'm going to get on a loan. You're never going to get a loan with that low an interest in a bank or in many lenders. So if you can get 100,000 or 150,000, 10,000 isn't going to make that much of a difference. You may want to go into it just saying, look, I'm not going to pay any of it back. And then you can use that idle money for anything that you want, because you're paying it back like a regular loan. Now, the PPP, there's a lot of changes that have happened. Last Monday, Congress voted on a bill. They voted a bill through. And then Friday, the Senate voted a bill through. And Saturday, the president signed it into law. So the PPP from day one was 75% of that money you had to use for payroll, and 25% you had to use for utilities, rent, telephone, and monthly expenses. They have now changed that. It's 60% of whatever money you get in the PPP has to be used for payroll, and 40% for utilities, rent, telephone, and monthly expenses. That's a much easier matrix to figure out. So that's one of the really good news about the PPP. So before we talk about the payroll part, let's talk about the 40% because that's an easier thing to figure out. The 40% is what is included in that. Rent is included, but again, I say the same thing with property taxes. It's not specifically written in the law, but CPAs and experts are telling me, and they agree with me, that the answer is probably yes, but nobody really knows for sure because of the actual wording. So no ruling on that. Also, if you have a sole proprietorship, and you have a home office rent, there's nothing that I've seen in the law that would include the home office rent as part of regular rent. And one of the reasons for that is if you're a sole proprietor or you're a single member LLC and you're working from home, then you can get you can get the EIDL, and you are now eligible for unemployment as a sole proprietor or a single member LLC. So the PPP is not the only way to go. And unemployment, you can spend money any way you want. And the EIDL, depending on how much you get, of course, you can spend most of that pretty much any way you want. So it's the home office rent is not part of the 40%. We talked about the credit card debts from before COVID-19. No, your old debts from before COVID hit are not part of the PPP money, as it's not part of the EIDL money. But the monthly credit card expenses starting on the day that you receive the PPP money. So as I read the PPP law, the expenses that actually go on a credit card from the day that you have received the PPP, those are regular monthly expenses. And they are forgivable in the PPP. It's unclear to me if you can use the PPP money to make the monthly minimum payments on debts that are on credit cards from before PPP. So again, the PPP is a little bit more complicated than the EIDL, and the way it's written, there's still some holes in this. So I would use this money on rent, I would use it on utilities, and I would use it on payroll. Anything else, I would wait until maybe they add something or they change something in this law a little later. Subcontractors are not included in the 40% of the PPP money, and subcontractors are not considered payroll. So if you have subcontractors, either corporations or non-corporations, working for you as either contractors or subcontractors, any 1099 eligible people, they are not going to be part of the PPP forgivable part. The biggest law that was changed with all of this is the 8-week period from the day that you receive the funds. From the very beginning, you had 8 weeks to spend that money. It is now extended to 24 weeks or December 31st, 2020, whichever comes first. So for most people right now, it's going to be a little bit before December 31st, depending on when you got that money. But 24 weeks to spend 60% on payroll and 40% on utilities is definitely a lot easier than 8 weeks and the 75-25. So it starts on the day that you receive the PPP money, not the day that you apply, not the day that you were approved, but the day that that money is actually in your account. The borrower, meaning you, not the bank and not the lender, can choose to extend from the 8 weeks to the 24 weeks. I think most people are probably going to choose the 24 weeks. That really makes a lot more sense to me because it gives you that much more time. So that's the 40%, the rent, telephone, and monthly operating expenses. The payroll costs for purposes of the PPP, this is where it gets a little bit tricky because the PPP really is a payroll loan. So this is where there's more rules involved. The payroll cost for purposes of the PPP is gross salaries. A gross salary and wage is considered the net take-home pay, meaning the money that your employees get on their paychecks, plus any taxes withheld for the employee that you processed, but the employee's money that's withheld from a paycheck. So basically, net take-home plus employee payroll taxes that's being withheld equal gross wages. And for purposes of the payroll forgiveness, the employer, meaning the company's portion of the health insurance, the company's portion of the 401k matching contributions, and the employer paid state and local taxes. So that's all part of the PPP forgiveness. So it's the gross salaries, whatever the employee makes in a given week or a given payroll period, which is take-home pay and taxes withheld from their paycheck, and many of the taxes that the employer pays on behalf of the employee and the employer portion of the payroll tax. So there's employer health insurance, employer 401k, and state and local taxes. It only covers employees making up to $100,000 per year, which is in a monthly amount, $8,333.33, if that helps to know how much someone's making every year. If someone makes $125,000 a year, they are only going to be covered up to $100,000 of forgivable PPP money. That's part of that 60%. What's not included is the employer portion of payroll tax, the Social Security, the Medicare, and the state unemployment insurance. Those three categories are not included. So from a bookkeeping and from an accounting standpoint, I am using all of the PPP money to pay your outside payroll service, even including payroll fees, because most of this is being taken out electronically from your bank account. This is why I like having the PPP money in a separate bank account. At the end of the day, what you're able to do is reimburse from your operating checking account, reimburse the checking account for that has that PPP money in it, reimburse the payroll fees, which are not forgivable, and reimburse the Social Security, the Medicare, and the state unemployment tax. So you take that amount of money from the operating account, transfer it into your PPP bank account, and then that will allow you to use that money for forgivable amounts and forgivable categories of the PPP. So there's going to be a lot of movement of funds and a lot of really harder core accounting than you're used to. I would absolutely suggest to you that the second you start using the idle money and the second you start using the PPP money, any bills, any payroll, anything that you're using the PPP or the idle money for, you should make sure you have the bills. I would print them out. I'm a paper person. You don't have to print it. You can have digital any kind of an outside storage, digital storage. But I like to actually print it out, all the bills, all the payroll reports, everything, so that when it's time for you to go to your lender or your bank or whoever you got the PPP or the idle money through, you don't know, nobody really absolutely knows at this point what they are going to be asking you for. So I will be prepared. I will have the bank statement. I will have every single bill, every single payroll report that I used the PPP or the idle money for, printed out in a separate file folder that I or my client can go to the lender and say, here's all the paperwork, do your computation, do whatever you have to do. I have it under control. It's all going to be forgiven. That's what my goal is. I've kind of taken it upon myself. My goal as a bookkeeper is to try, if the client says, yes, my goal is to make it 100% forgiven, then that's what I'm going to try to do. And the only way of doing that is to be extremely, extremely, extremely organized and really anal about the paperwork that has to do with this PPP or idle money going out. I want to talk a little bit about FTEE, which is part of payroll. It used to be much more complicated, but this is a lot easier now than it used to be with this new law that was just signed into law on Saturday. The FTEE is called a full-time equivalent employee, which, and according to the laws that have always been, 30 hours a week is considered a full-time employee. So if pre-COVID, you had 2 employees working 30 hours a week, then each pay period, you are paying for 60 hours of employee work time. You need to have basically, and we'll talk more about this in a minute, but you need to have at the end of the day, your goal has to be whatever your FTEE hours were in December of 2019 or January of 2020. When it's time to forgive this loan, that's what your goal has to be. At least the same amount of hours. Doesn't have to be 2 employees at 30 hours. It could be 4 employees at 15 hours. As long as you get the equivalent of a full-time employee, or if it's 2 full-time employees, it's the amount of hours that you're paying. So this is one of the important parts of the PPP program. The idea is that if you go into COVID with 5 employees, given a certain amount of hours, they want you at the time of forgiveness to have the same FTEE and the same amount of payroll hours that you're paying for, so that you're at the point where you were before COVID hit. That, now there are exceptions to that rule, but that is what your goal should be. Sole proprietors are a little bit different. There are many sole proprietors who are one-person operations. They don't have any W-2 payroll at all. And if you're a sole proprietor or a single owner of an LLC, there is no payroll for you as an owner. You just take out a draw. So what they have expanded about 3 weeks ago or so, they have now expanded the PPP to be given out to sole proprietorships or single owner, single member LLCs. So the sole proprietors can now get their own PPP loan, but the calculation is different. The calculation would be on line 31 of the Schedule C, which is the net profit of your 2019, if it's filed yet, or if it's not, 2018 tax return. And then you can divide that by 12 months and multiply by 2, and that can be your quote payroll as a sole proprietor, and you can use that with the PPP money. So that's a little bit different. That is, and all of these rules about payroll, by the way, are subject to change because they have changed almost every week since this has begun. Hopefully it won't be very many more changes because many changes were made last Saturday. But the FTEE is much less complicated than it used to be. But And again, there are some exceptions to that. These are the two big parts of the new law. You can use the 24-week period to restore the workforce to pre-COVID levels. This is what I was just saying. This is what your goal has to be. And if you do that, you get full forgiveness. There is what is called a kind of a cliff. And this is part of the law that was put into the books on Saturday afternoon or Saturday morning when the president signed it. And that is, it's 60% for payroll, 40% for everything else. If you happen at the end of the day it's figured out that you're 59.9% of payroll and 61.1% of utilities and telephone and everything else and rent and leases, none of the PPP will be forgiven. So they are really making the PPP borrowers work for 100% forgiveness. This has got to be figured out very carefully, and the math has to be done very carefully so that when you sit down with your lender at the time that you are filling out the forgiveness form, you want to make sure that your numbers are absolutely right. Otherwise, you might not get any of this loan back as a PPP forgiveness. So that's a really important thing that was not there before Saturday. If you laid off employees at the beginning of the COVID and they are receiving unemployment, if now you're ready to hire them back, you call them and they say, I'm not accepting your offer, thank you very much. Technically by law, they are now no longer eligible for unemployment because they turned down a job. But the exception to that with COVID is if they are a single mother or a single father and they're staying home taking care of the kids and unable to work because there's day camp, but there's no sleepaway camp, we don't think this year. And they really cannot come to the office all day and work. That is the only reason why someone can say, thank you, but no thank you. I'm staying on unemployment because I can't work. If their job is able to be done from home, then that is an argument. Then they will have a tougher argument saying, well, I couldn't take the job because I have kids, I'm stuck at home. But if that job is able to be done at home, then that is an argument that I haven't seen anything in the law that's specifically that has to do with that. But I would say probably you will probably be able to maybe you can hire them part-time to do some work during the day, and then they can take care of the kids or whatever other times. Obviously, if they're sick, if they have COVID, or if a family member is sick, or if your mother and father moved in and you're caregivers for someone else, obviously that's a reason that you can say no to a job offer. If you have two employees who you offer that job back to when they're both 30 hours, again, you can hire two other people for 30 hours each or 4 people for 15 hours each, as long as you meet those FTEE requirements. So the whole payroll part of this is a little bit tricky with the PPP. The good news in all of this is if you were able to make money during this shutdown, and I do have several clients, even clients who were shuttered. I have clients who have been in business as bars for the last 5 or 6 years. They were shuttered sometime in March, or even before March, I think. They pivoted. They were able to pivot their business to delivery now. and they're not making anywhere near the money that when they did when the bar was open, but they have pivoted so that they can be making delivery and still making some money. I have another client of mine who they were an in-person tour company, all sorts of really interesting tours of New York City. They have pivoted to online tours, and it is amazing the kind of tours that they can do, virtual tours of museums, tours of so many different things. They even have a wine tasting tour that is virtual online. The good news is any money that you've made during COVID when your business has been shuttered is not part of the forgiveness. That's the good news. So if they only care about the expenses. If you're making money or you're not making money, it's just not part of the matrix of the forgiveness. The takeaway, and this is my opinion, the takeaway in this is that the government can't really afford to give out money with no strings attached because we need a government. We are trillions of dollars in debt, and we can't afford to keep on printing money. Those are just the facts. So when the government gives you any kind of money, it's not without some rules and not without some hoops that you have to jump through. So they are, pardon the pun, they are banking on the fact that there will be a percentage of these loans, just like they banked on it during the 2007, 2008 bailout for the auto companies. They are banking on the idea that some of these loans will not be forgiven. They are banking on the idea that some companies will say, well, the idle is only an extra $10,000 and I was able to get 150,000. Let's just pay back everything with that 3.75% interest. Or I'm going to just use the PPP loan. I'm not even going to try to follow the rules. It's only a 1% interest for the PPP. So why not take an $80,000 or a $90,000 or a $100,000 PPP and pay it back with the lowest interest that you're ever going to get in any government or bank or any kind of a loan at all? So that's the takeaway for me is depends on where you are at a business. In December of 19 or 2020, or January of 2020, if you were ready to expand, then eventually, hopefully sooner than later, eventually the economy is going to improve and you're going to be in the position of wanting to expand again. So why not take the loans, not jump through hoops, not be forgiven for any of it, and then just pay it back at a very low percentage? That's one way to go. And I've seen my clients, depending on where they are with their business and what their cash flow was before COVID, they look at this both ways. But whenever you get money from the government, you've got to believe that it's just not totally free money. I'm a big advocate of that. It's great if it was free money, but they will always find a reason for you to jump through hoops. So if you want it to be forgiven, a part or all of the PPP or a part or all of the idle, you do have to do exactly what the rules are. Another takeaway from this is from a bookkeeping, from an accounting standpoint, the income from these loans or grants are not going to be counted as taxable income. So that basically means this is why the PPP and the idle money, on one of the first slides that I showed you, I, as a bookkeeper, do not put that as a regular income account. I put it in as an other income account. It is incoming money, but it's not going to be taxable income on your tax return. It will be somewhere on your tax return, but it won't be taxable income. If it's not going to be taxable income, the expenses cannot be tax deductible expenses either. So if you're using the PPP money for your payroll, then you can't not count the PPP money as income, but count the payroll as a tax deduction for the company. You have to take that expense and connect it to the same bank account and the same account in your accounting system as where that first money of the EIDL or the PPP went into. So the idea is if you have a $10,000 EIDL loan that you do want forgiven, then the $10,000 goes in as non-taxable income. What you use that money for is attached to that same account. And in bookkeeping and in accounting, it goes in as a negative number. So that if $10,000 goes into that EIDL other income account, all of your expenses will show in your accounting as negative numbers. Eventually, that 10,000 will be zero. So it's an in and out again, sort of an account, almost like an escrow account that lawyers use. Money comes in from settlements, money goes out, and you pay settlements back to the client, and it all zeroes out at the end of the day. That's why I like to separate things. If you try to take those payroll expenses that you're getting money back or money forgiven for, and you double dip and you put that on an expense account and you take it off on your taxes, that's something they will be looking for in next year's tax returns, and you will get audited every time for that. They want to make sure that this is being done correctly. Again, from the new law, just to sum this up, the PPP borrowers, not the lenders, can choose to extend the 8-week period to 24 weeks, or they can keep the original 8. The payroll used to be 75%. It's now down to 60%. And there is now a cliff. So even if you're at 58 or 59% of this money being used for payroll, no part of the PPP will be forgiven. Not just the 2% or the 1%, but 0% will be forgiven. So make really sure that you are at a 60% amount of this PPP money. Borrowers can use the 24-week period to restore their workforce levels and wages to the pre-COVID levels. So rather than 8 weeks, you now have 24 weeks, and you should be able to do that within 24 weeks. The other part of that is that this new bill that was signed into law on Saturday, it allows borrowers to adjust if they could not find qualified employees to replace employees who can't come back. So there is a provision that if you're in a specialized business and you had 5 employees, let's say, and none of those 5 employees, or maybe one of those 5 employees, wanted to come back when you offered them their job back, but you had to hire all new people. And even in the 24-week period, you couldn't find qualified people to hire without going through, many months training period. That is one of the provisions that's made into this bill. You would have to prove it, and you would have to, explain why you couldn't hire qualified people. But if you really couldn't because of the kind of business that you are in, then you don't have to go back to pre-COVID levels. That's one of the exceptions to the law. So it is a much better law, and I'm sure, than it used to be. And I'm sure, again, they will make some changes to this, I'm sure, as time goes on. What I will try to do for everyone who is here now is, as I hear about new laws or changes to the law or different wording in the law, I will put together something and send it to BCNA, and they will, when there's more than 3 or 4 or 5 of them to put in a list, I will send it out to them, and they will send it out to you. So it's something I try to make it part of almost every day. I check to see what has changed today, from yesterday, from the day before. And when I go home, I don't shut it off either. I watch a lot of news at CNN, and a lot of news at night, business news, to see what is maybe on the horizon for the EIDL and the PPP. So it does take a lot of time to do this, but the better you're prepared, if you do want all of this to be forgiven, the better you're prepared, the better organized you are in your bookkeeping, the better organized you are in your paperwork, the better and the easier it's going to be forgiven by the government. They also have, and yeah, we did talk about this. So if you're not able to rehire a worker or get another qualified worker, this is one of the additional things. In closing, I just want to say that I am one of the optimistic people, and I never like to look back. I like to look toward the future, and I'm very, very happy that at least phase 1 in New York City has started, and that's very exciting. There is a sense of normalcy out there. The traffic is back, and my wife tells me that the subways are a lot more crowded, and this is all good news. Businesses are opening, restaurants are starting to be able to serve people outside, so that there is a reason to start living again. And I think phase 2 is 2, 3, 4 weeks away at the most. And I think that by sometime in July or August, there will really be a sense of normalcy. So I like to move forward. I'm expecting that there's going to be a lot of new businesses starting up by very smart, innovative people, and we will find a way through this, and we will be better for it. I get up every morning thinking that, and I hope you do too. Thank you all for coming, and I'm going to give it back to Sharon for any questions.
Okay, so thank you so much, Paul. Very informative session. And yeah, so we are going to open it for Q&A. I do see some questions in the chat, and I'm going to go over the questions. Yeah, so feel free, to put down your questions in the chat. And also, I just, sent you all the link for the webinar feedback form. So if you could kindly fill it out, if anyone is, going to sign out, please take a minute to fill it out before you sign up. All right. Thank you so much. Okay. So let me go through the questions. Okay, so the first question we have is, I have a small business loan with a higher interest rate. Can I use my EIDL loan to pay off the higher interest loan?
I have not seen, that's a great question, by the way. I have not seen that in the wording of the loans. I would interpret that as the answer is no. They want you to really use the EIDL, or at least the first 10,000 of that EIDL money, for really monthly expenses. So is a monthly expense paying the principal of the loan? Not really. If there's interest to that loan, then probably yes, because you are allowed to use that for interest on the mortgage. But again, I haven't seen anything specifically written for paying off other loans. I would be more conservative, actually, and probably say no, because you don't want to be surprised at the end of this whole thing where you want to get forgiven, and at the last minute someone says, oh, you use that money to pay a current loan. No, we can't. We're not going to give you forgiveness for that. So I would be very conservative with that. If you say to yourself, you got a $40,000 EIDL loan, if you say to yourself, and kind of program your mind that you're not going to get any forgiveness on that first 10,000, then you can use it for anything and pay it back at probably a lower percent interest than you're getting on your current loan.
Okay. The next question is, I'm a new real estate agent since November 2019, and I was a W-2 employee most of the 2019. I just got my PPP and EIDL loan approved, and I was wondering if I pay myself payroll, is it forgivable?
It depends on the kind of company you are. If you're a sole proprietorship, if you have a PPP loan through the sole proprietorship, then the matrix and the equation is very, very different. Then you have to look at your Schedule C from 2019 and you take line 31, which is the net profit of last year, and you do the math from there. It's not the same rules for sole proprietors. If you are an S corporation, then as I understand it, then yes, you are an employee of your own S corporation, so that all the rules that I talked about with W-2 employees apply to you as an owner of the S corp, but not a single member LLC and not a sole proprietor. It depends on the kind of entity you are.
All right. Ismail is asking, can you send me the application for the PPP? So yes, with the recording of this webinar, we will be sending you the application form for the PPP forgiveness. As Paul mentioned, it seems like the information will be updated, may change. So that is the reason we didn't want it to go over it today. But we will send it to you just for you all to have an idea. And since it's a very technical form, we definitely feel you would need help, from an accountant or the lender where you got the PPP to guide you through the application form. Okay.
And I just want to add, can I just add something to that?
Sure.
If we're talking about an accountant helping you with this, and I've gotten into some really serious conversations with some accountants and some tax preparers, written into the law, just so everyone understands this, is if you go to your CPA or accountant or tax preparer, by law in this CARES Act, they are not allowed to charge you money to help you fill out your application. That is something that's built into it. Now, if you say to a tax preparer, can you fill out the application? Can you handle the money? Tell me what to do. I don't want any part of it. Then they can charge a retainer, or they can charge a fee, or whatever they want to do. But strictly to help you fill out the applications, I can tell you as a bookkeeper, I have eaten probably 50 to 60 hours of not charging people. I mean, I wouldn't have anyway, even if it wasn't in the law. But I think that's actually a good law. You don't want accountants taking advantage of you by charging you for something that they really shouldn't be. So I just wanted to add that.
Yes, and probably down the line, once everything is finalized, we can have another follow-up webinar on the process of the PPP forgiveness. So yeah, so definitely look out, for our upcoming webinars. I sent it in the chat, the link to our website where you can register for our upcoming webinars and to get up-to-date information as about our webinars that we'll be doing. The next question is, if I have a PPP loan and then later got an EIDL, how do those balances affect each other? What if I then got a loan through SBS?
I would have to look that up and see how that was affected with the Saturday new law, but it was and probably still is kind of complicated. If you have the PPP and you have the EIDL, both, you can you can use a portion, and I believe that this is the way it was, at least before Saturday, that you can use a portion of the idle for payroll. And you can kind of use the idle to pay back the PPP, but it is complicated. What I can do is look that up, see what the latest information is on that, and send you some information on that in the next day or so.
And I just want to add on the question. So Cambry, I don't know if you are referring to the SPS loan, from before. Is it the New York City Small Business Continuity Loan Fund, or if it's a new loan fund that just released? So I don't know if you want to put it on the chat. Maybe I may be able to add something on that. Okay, so next question is from Serena. She is asking, is the 10,000 idle forgivable, the same as the cash advance that was deposited while waiting for the idle loan decision?
Okay, you're really talking about the same thing. When idle first came out, it was kind of advertised as free money. So you didn't have to account for it. It was totally free. You can spend it however you want. And then within a week or two after people were applying for this, it came out that, hey, that's not really what's going on. They use the word in the CARES Act, they use the word advance. They do not use the word grant. So it starts off, if you get approved for $100,000 idle money, the first 10,000, which is usually in a separate deposit of 10,000, is considered an advance on that larger loan. It's not really, it's treated differently. They look at that as an advance that could turn into a grant if you follow the rules. So if you follow the rules and everything is forgivable, then the first 10,000, that's really technically part of the loan, now becomes a grant. So if you got a $100,000 loan, now the loan is $90,000 because 10,000 of it is now forgiven. But it starts off as an advance on that loan, and they didn't really make that clear to a lot of people. So some people were surprised that it wasn't just automatically free money. It's not. You have to follow the rules that I talked about.
All right. Dan asks, we just received loan paperwork for idle. It gives the monthly payment about, but then it says you have to submit receipts for expenses. So then that sounds like a line of credit.
Well, the idle is, again, considered a loan until you make that first $10,000 into a grant because you're spending the money the way they want you to. It's considered a loan. They want the receipts and they want to make sure only, as I understand it, only on the first $10,000 if you want it to be forgiven. After the first $10,000, it is a regular loan. You can really use it for anything. There's really no rules on that because you're paying it back. So it's a regular loan, which you can almost think of as a line of credit. But remember, the idle is a 3.75% interest-bearing loan. That's a very small amount for a loan of $80 or $90 or $100,000. So if this is something that you were going to do anyway, if you were thinking about a credit line or you're thinking about a loan from a bank, might be the cheaper way to go. If you weren't thinking about that loan, but you accepted the total amount of money that they offered you, then again, only $10,000 of that is going to be forgiven. You didn't, if they offered you $100,000, you didn't have to accept it. You could have accepted only the $10,000. I hope that helps.
All right, next question is, with the extension to 24 weeks, does that mean okay, let me rephrase this. I think basically what Mary is asking, I think she got the PPP in May. And now with the extension to 24 weeks, can I use the fund to pay rent and utilities for May, June, July, and August?
Yes, from the day that you receive the PPP money is the day that you can start using the PPP money for the next 24 weeks. So rent and utilities and all of that, yes. But just be careful that you have to use at least 60% of that PPP money for payroll.
Okay, next question is, are auto leases included in transportation cost for PPP forgiveness? And can you seek forgiveness prior to the expiration of your 24 weeks period if you use all the PPP money and are fully staffed?
To my understanding, yes, on all of that. Any kind of a lease, it could be a lease of furniture, you can be leasing a vehicle, you can be leasing machinery, you can be leasing a refrigerator for a commercial kitchen, something like that. Any kind of a lease is part of what can be forgiven. If you use the all of the money before the 24 weeks, then yes, you don't have to wait until the 24 weeks to be forgiven if your numbers are correct.
Next question is, federal payroll taxes are still not included in PPP approved expenditures. Is that correct?
Federal payroll taxes, as far as I understand, yes. And this is something that has changed over the course of time, but I believe that all of the withheld money, the money that's withheld from employees' paychecks, and part of that is federal, part of that is state, are all part of the PPP. Also, the federal taxes, and this is not, again, let me look that up because I'm not sure. I believe the federal taxes, there's been some changes in that. And I think it might be that the employer part of the federal taxes are now extended. So you do have to pay them. They're not going to be part of the PPP, but you have an extra several months to pay it. Kind of like what they did with the filing for the April 15 is now July 15. But I will look that up and I'll send that out to all of the participants here.
Okay. The next question is, does transportation cost include transportation cost for clients? They are nonprofit.
Again, it's not specifically written in the laws, but I would interpret it as yes. I mean, if it's part of doing business, as part of what you've always done, then yes, I would say local transportation, Ubers and Lyfts and MTA costs and things like that, and taxis, yes. I would interpret it that way.
Okay. Can you pay rent in advance?
Well, you can. If the question is it forgivable? No, because in accounting, if you pay, it's now June. If you pay July's rent today, then it's not an expense in your accounting system. It actually is considered an asset because if something happens between now and July, you can get your rent money back because July hasn't happened yet. So sure, you can pay for cash flow purposes, but July's rent is not going to be a forgivable expense until at least July 1st.
Okay, next question is from Dell. Do we need to inform the lender if we want to use the funds in 8 weeks or 24 weeks?
That's a good question. Nobody really knows that. I don't, and I haven't read anything about it. It doesn't. I haven't read anything saying when or who do you tell if you want to use the 8 weeks or the 24 or the 24 weeks. It might just be that if it's 8 weeks and you're ready to get things forgiven, then you go back to the lender and you get it, you do the paperwork and you get it forgiven. If you want to wait the 24 weeks, you may not have to tell anyone. You just wait the 24 weeks.
Yep.
That's how I would kind of read that, but there's nothing specifically about that in the law.
Mm-hmm. Okay, next question is health insurance paid monthly on a credit card for single member LLC considered expense for PPP?
What's the first part of that? If what is on a credit card?
Is health insurance paid monthly on a credit card?
For a single member LLC?
Mm-hmm.
That's another good question. I believe the answer is yes. I think I read something on that for a sole proprietor who gets a PPP loan, health insurance is part of that. Now, health insurance is not part of it if you have a spouse who is working and is covered and you are the add-on. But if you're paying your own health insurance, I'm about 95% sure that yes, the answer is yes. I will double check that and include that in what we mail out all of you people who are here.
Okay, Sarina says for restaurants and cafes, it will be very difficult to have the same number of FTEE hours as before COVID. That's true.
Yeah, this is something that was built into the law that was put in on Saturday. If you're obviously in terms of restaurants, which is a whole different thing anyway. But in restaurants, if you are, even if it's 6 months from now or 7 months from now, you may not. I mean, we hope you will, but you may not get back to the pre-COVID levels. That's going to be one of the exceptions. It's if your sales are 75% or 60% or 50% of what they were pre-COVID, then they're not going to expect you to have the same amount of FTEE. So, I mean, that is something that they've added. That's one of the exception to the rules with the FTEE. It's really based on sales. And if you have half the amount of sales that you did last December or in January of 2020, then yeah, it makes perfect sense that you're not going to need the full staff that you had. So as long as you can document that, then you're fine.
Okay, next question is, are other kinds of family care acceptable reasons for receiving unemployment benefit? And she says the example, elder care.
As far as I know, yes. If you are, if you cannot work because you're taking care of someone else, if it is due to COVID. If it's not due to COVID, if it's something different, then no. But if it's due to COVID, and you're the only person who can provide that care, then the answer is yes. So it's very specific in terms of COVID.
Okay, so that's another question on unemployment. What if the employee refuses to accept the job offer because they are receiving more money on unemployment? Can you lay them off? And how long do you need to spend the idle money?
Okay, let's talk about the idle first. The idle money is, I haven't seen anything written about how long it is, because really the only forgivable part of the idle money is $10,000. And $10,000 in any business is not going to last all that long. That's not a lot of money when you're dealing with New York City rent. So I haven't seen anything about 24 weeks or 8 weeks, or you apply for forgiveness when you've spent the $10,000. Now the unemployment is, keep in mind, they have changed some of the unemployment rules. When people first applied for unemployment, they were getting $600 a week from the federal unemployment due to COVID. And then they were getting regular unemployment, 150, 200, whatever, a week from the state. And they were then combined. The COVID, the $600 a week from COVID ends at the end of July. So yes, are people going to say between now and the end of July, I'm not going to accept your job offer because I'm making more money? You know, and maybe they may not tell you that, but if they don't accept your job offer, then yes, you could lay them off. You just have to document that, you know, that you have to get them to either get, you know, email or some kind of a letter saying that they are saying no to the position that you are offering them, which is, you know, perfectly fine if that's what they want to do. But at the same time, if it's not for a COVID reason, you know, if they don't have kids, if there's no reason except the extra COVID money, they're going to lose that on August 1st. And then they're going to come clamoring back to you asking for their job back because now they're not making more money than they would if they were working for you. So I think you should, as an employer who is offering a job back to someone, you might want to say exactly what I just said. You know, your COVID money is going to go away July 31st, and I'm under no obligation to offer you your job back on August 1st. So what do you want to do? What do you want to do for the long term? Better to work for me now and make a little bit less money than lose the COVID and not be able to get your job back.
Okay, next question is, do you need to create a separate expense account for the PPP and idle expenses?
This is what I would do, but it would not be an expense account. What I would do, and you could, if that's the way you wanted to do it, sure, because in the second slide that I showed you, I think, I had an other income account for the PPP or for the idle. And if my client has a PPP, then it would be another other income account for the PPP. If you wanted to go the expense route, that's perfectly fine. You would have one expense account for all PPP expenses, one expense account for all the idle expenses, and at the end of the day, the idle money of the first $10,000 that might be forgivable, you should have $10,000 of expenses. And then it can be moved and everything can be all zeroed out. But you don't want to fall into the trap of having an other income account for the incoming idle and an expense account for the outgoing, because the expenses are not going to be tax deductible. So you could make the expense account an other expense account, which again is going to be on the very bottom of the profit and loss, like I showed you on that second slide.
Okay. Glenda asks, I received a 7,000 grant from the NYC SBA. Do you know if I need to account for how I spent it?
That's another great question. I only had one client or two clients who applied for the New York City, and they were kind of approved, but they ran out of money. So I haven't really dealt with that. I don't have the answer to that question on what the rules are. I know in the application for New York City loans and grants were much more complicated than the PPP and the idle. That took us a couple of hours just to get the numbers that they wanted. So I will have to look that up. That's a great question. I don't know how strict they're going to be, or if they are. I know some of the New York City ones were just grants, and they were kind of free, where I never heard that you had to account for it. But that's something I can find out. That's a great question.
I have a few questions about in Facebook. Some of them you already answered, but I didn't hear anything about, do PP loans cover paid sick leave?
Yes, sick leave is if you're sick due to COVID. I mean, not having COVID, but if you need to get paid for sick leave because you're taking care of someone else, or any other reason due to the COVID situation, then yes, sick leave is part of it. Yes.
Okay. The second question is, if it's a company that is using an outsourcing for payroll.
You mean you're talking about leased employees?
Yes, they use a company to process payroll and report the payroll taxes. Are they eligible for a loan?
Well, there's two things about payroll. One would be a payroll company just processing payroll for you. And then, yes, if it's Paychex or ADP or Gusto or Zen or one of the other payroll companies, then absolutely yes. If you have, and there's a new thing going on the last several years called leased employees. And leased employees is when you hire a company. If I were working for you and you have leased employees, then in your books, it would not be a payroll expense. It would actually be a professional fee expense. But with leased employees, if the company who produces the W-2s and the company that the leased employees technically is working for, if they send you a payroll report, as long as the payroll report has your name on it or the company's name on it, then the answer is yes, they are covered.
Thank you.
That's not the first time I've heard that question. I had to do some research on that. So that just came up relatively soon, recently.
All right. The next question is, so when you apply for forgiveness, do you need to fill out 2 separate forgiveness applications for EIDL and PPP?
The form that I have seen actually has everything on one form. They talk about the PPP, the day that you receive the PPP money and the day that you've received the EIDL money. So it seems to be on the same form. If that will change, I don't know. But as of what I've seen so far, it's all on the same form.
Okay, next question is from Glenda. Glenda, do you mind unmuting yourself and address this question? Because I'm not very sure if I got it correct. Glenda?
Sorry, I don't remember which question that is. Is that the one about basically to be clear on the use of the PPP and the EIDL? As long as I'm not looking to having it be forgivable, I can just take either money as a loan and just pay the interest loan, as long as I'm using it for my business, as long as I follow the rules on where I use it, right?
Yes, basically, if your mindset is not to have it forgiven at all, and just use it as a loan.
Yes.
The only stipulation that I understand is it has to be a business expense. You can't take that loan and transfer it to your personal account and spend it on personal, on personal stuff at the store. It has to be a business loan, which is true with any other business loan, really. But yeah, I mean, that's the only rules that so if your mindset, and I have several clients who are going to be doing that, their mindset is just not to get any of it forgiven and use it as a straightforward business loan, then yeah, just you can put all of that in the liability section as a long-term loan and pay the 3.75% over, I think it's 5 years and 20 years, I think, or 30 years actually now for the PPP loan at 1%.
Okay, thank you.
Sure.
All right. So the next question is from Diane regarding the forgiveness on the EIDL advance. So Diane, if you feel that you already got the answer for your question, if not, feel free to unmute yourself now, and you can address this question if you feel that you didn't get the answer to your question from earlier questions.
Thank you. You know what? I guess I'm just a little confused because as you keep saying, everything has just changed so much. So in the beginning, they said, the EIDL advance was $10,000 free, whatever, right? Up front, that it'd be treated as a grant. But then it turned out that it was up to $10,000 because it was, like $1,000 per employee. So we got $3,000. So that's what you're talking about would be forgiven if we wanted to be forgiven as a grant would be the $3,000. And it's not just like 10,000 everybody gets. It's just whatever you receive per employee that would be forgivable. Is that what you've been talking about? Because I'm just confused.
Yeah, it's up to 10,000. So there's a lot of my clients, very small businesses, that have gotten $2,000 and $3,000 and $4,000. So it's not an automatic 10. It's up to 10,000, or the first 10,000. So if you get less than 10,000, then 100% of what you receive from EIDL will be forgivable.
So it'll be forgivable, but I just have to put it on the paperwork.
Yes.
Okay. And can I just ask one other question?
Sure.
We did get the paperwork for the EIDL, and we did read through all 37 pages or whatever.
Good for you.
But there's just some stuff. It just was confusing because it right out front tells you that it's a loan and that our payment is X dollars per month. But then it says your payout may be in multiple payouts, and that you might have to submit paperwork in order to get the payout. So then it sounds more like a line of credit. It doesn't sound like a loan, but then that doesn't match up with them telling us how much the payment is, because it specifically even says in like all the backup documentation that your interest will start accumulating from when the payment is made, or multiple payments. So and you have to spend it within 6 months. So it's just, it's very confusing.
Well, the up to the first 10,000 is in the paperwork and in the law as an advance on the total amount of the loan. So if you get approved for 100,000, you will get $10,000 in a separate deposit. And they do it in a separate deposit because 90 of that 100,000, under no circumstance is that going to be forgivable. The up to the first 10,000 will be. So they deposit it as a quote advance on your loan. They're not calling it a grant until it is forgiven. Then it changes status from a loan to a grant. So that's kind of why they word it that way. They're expecting it, or they are trying to kind of, I'm not going to say brainwash, but they are thinking about trying to get you to think about having the whole thing as a loan and not going through the hoops to get the first 10,000 forgiven. And that's how I read it.
Okay, so I just want to understand. So I got that advance, and now I'm just going to get one other payment, which will be the loan amount. And then I just have to worry about doing all the documentation and stuff. It's not like I have to keep continually submitting documentation in order to just get the loan paid out.
To my understanding, no, you don't have to continually, produce the documentation. Although, I would probably, as you pay bills and as you pay things with that loan money, just because rules are changing a lot, I would probably just get a stamp maybe and just make the stamp like from Vistaprint or somewhere and make the stamp just say EIDL money. So if you're ever asked, you'll know that you use the EIDL money for this particular bill.
Terrific. Thank you so much. I appreciate you answering my questions.
Sure.
All right. So I think this will be the last question. Unless Jacqueline, if there are any questions on Facebook, this is the last question I have on the chat. Can I use 100% for payroll on PPP?
You could if you wanted to. There's nothing wrong with that, but then you're going to be paying rent from other money. and utilities and everything else. If you just wanted to, if you wanted to use 100% of the PPP money for payroll, there's nothing saying you can't do that. It just has to be a minimum of 60%.